Welcome back, guys, to another roundtable. My name is Adam. With me once again, Rusmin.
Hello.
And Victor.
Hi, everyone.
Thank you so much for joining us at this roundtable. And today we're going to talk about the biggest IPO that's slated to happen in Singapore this year, and it's slated to raise $600 million in its IPO. And we're going to talk about Digital Core REIT. All right, so I think REITs are very popular in Singapore, right, guys?
It's super popular.
Yeah, and we have one of the biggest REIT markets in Asia, in Singapore, yeah.
Excluding Japan.
Excluding Japan. And, and everyone loves REITs in Singapore, and because dividends here are tax-free.
Yep.
So wherever you are in the world, if you invest in Singapore stocks or REITs, dividends are tax-free. So we're going to cover this, and pretty exciting Digital Core REIT, because this is in the industry of data centers. And everyone knows data centers are a huge thing nowadays, especially post-COVID and all that. So we're going to talk about Digital Core REIT and what we think about it. All right, so guys, what do you think about Digital Core REIT, its portfolio, and what do you think about it?
So basically, they owns about 10 data centers, primarily in the US, right? It's about 81% are mainly in the US, and then 90% are in the Canada. So if you look at the 10 data centers that they're going to list it in this IPO, I would say that most of you actually freehold, and rarely you get freehold properties in Singapore, right? So it's kind of like mind blowing to a lot of Singaporean investors. Freehold data centers, right? Even Keppel DC doesn't
hold
have
it forever.
Yeah, yeah. So and then of course, if you look at some of the properties that they're going to list it, some of them are pretty old. Some of them had completed in 1977, 1973. They got refurbished, I think, in the 2000. Still, that was like about 20 years old, right? And in terms of square feet that they are able to rent out for these data centers is about close to 1.2 million. That's the size of Vivo City, if you were to compare it.
Okay.
Right. So just to give you an idea, they're going to list a data center of Vivo size.
It's a lot of service.
A lot of service inside.
Service.
Yeah, and so if you look at the so-called the purchase that they're going to buy these properties is below the valuation. I think it's about a single-digit kind of the discount. So it seems like a pretty attractive for investors over here, and especially you take into account the occupancy. All these are fully let out. Okay, so it is quite amazing, right? So about, or rather say, 4 data centers are mostly in Silicon Valley, and then 3 are in Northern Virginia. So these 2 markets are very popular for data centers. This is all the big tech company in the US hosted their data, or rather in the Northern Virginia, according to their report, about 70% of the world's internet actually runs through Northern Virginia, which is 3 of the data centers they are located in. Right? And of course, you have California also, about 29%, where all your Apple, Google hosted their data on those data center in those areas. Okay, so
it's basically like the East Coast and the West Coast of the US, where all the major economic activity is going to be.
Yes, and it's the place is relatively safe to run the data centers, right? So they have got all the things that tick over there. So and you look at the tenants that they have, unfortunately they never disclose who are the tenants, but I think we can guess. The first one is Fortune 50 software company. Victor, want to make a guess?
Yeah, I think most people guess it's Microsoft, right? Okay. But actually, if you go into one of I think their preliminary prospectus, I think they actually shared that actually 70% of their income comes from the 4 data centers. So over there at the picture, right, you can see there's a lot of names over there, like Amazon, Microsoft, Oracle, Alibaba, Tencent, Facebook, Apple, all these big names. Google also inside, right? So if you were to go to their sponsor, which is Digital Realty, right? Their slides, investor presentation slides, they have this thing called the top 20 customer. They literally disclose the top 20, okay? But of course, the first one they didn't disclose. They still put the Fortune 50 software companies, which most people guess is Microsoft. Then their second one is about IBM, Facebook, Oracle, Equinix, LinkedIn. So you can roughly guess who are the top customer. Basically, it's A++ type of customer.
Yeah, I think the reason why they never disclose is because when it comes to data centers, people don't want you to know privacy and security, especially, right? And you don't want people to go into your compound and then hack into your server, right? So that's something that they usually protect for their tenants, right? And so you look at the leases that they sign, all these tenants like your Apple, Microsoft, and whoever that are under their tenants, right? And they actually sign a very long-term leases, right? So typically for smaller tenants, they say they sign maybe at about 5 years, but anchor tenants typically they sign minimum 10 years to 15 years. Okay, so in terms of average lease to expiry, you are looking at about more than 6 years. So this is a long-term leases that we are looking at. So it will give very stable income, right, if you actually invest in this particular REIT. Okay, based on the profile that we are seeing right now. Okay, and moreover, if you look at the industry that they are in, like you said, they're enjoying a very nice tailwind. So global IP traffic is going to grow at double digit, 25% CAGR over the next year. All right, and the same thing for cloud market is going to grow at more than 20%. Okay, cloud spend also going to grow at more than 20%. Okay, so it seems like this industry is, the tenants are actually basically making very good businesses lah. Okay, but don't expect digital core REITs to grow at double digit, because they already signed the leases at fixed rate for long-term leases, maybe average 6 over years. But then they have a step up increment, right? They say average about 2% a year.
Yeah. So they also actually said that it's between 1 to 3%. So the average is 2%.
Yeah.
Okay. So just to summarize it kind of it looks like a very stable REIT with very high quality tenants.
Yep.
Yeah.
And even though you said like the properties are a bit old, 1970s something, which is older than us.
Yes.
Just to let you guys know, we're younger than that. Even then the properties are old, they're freehold.
Yep.
Yeah.
And they've been refurbished and all that.
Yeah.
So in a sense, it's like a very stable REIT, like you say, long WALEs, step up rentals and all that.
Yes.
So it looks like a very stable REIT, and we can kind of expect that from a REIT in particular. But when it comes to the REITs, usually you want to know what the strength of their sponsor is, because I think a lot of times some of the REITs that have listed in Singapore, with those without a strong sponsor, don't seem to do so well.
Yeah.
Because they have some difficulty with a pipeline of new assets coming in, or maybe they're not backed financially by a strong sponsor. So how about Digital Core REIT and their sponsor? How strong is their sponsor?
Okay, so their sponsor is actually Digital Realty, which is also listed in the stock exchange in the US.
And that's a REIT as well?
That's a REIT also. Okay. But the REIT is a bit different from Singapore REITs, because I think their REITs allow greenfield projects.
Yeah.
So they are allowed to take the money and going to buy into land and they build their own data center.
So kind of like a developer as well.
Correct.
Yeah, so let's to give a context. Singapore REITs are not allowed to go into development field, but they could, but it's only up to 25% of the portfolio size that they have. Okay, and that is for like AEI. They're doing asset enhancement initiative, and there isn't a gearing limit in the US as well for the REITs like Digital Realty. In Singapore, of course, there's a gearing limit of up to 50%, right? So I think that's the reason why US REITs can go into do this kind of greenfield projects. For Digital Realty.
Yeah. So the Digital Realty, I think they have been rather conservative when they have been growing their business moving forward. So if you look at their debt level, it's not that high. I think it's quite reasonable. Still within the range of the Singapore REITs range. I mean, in terms of their US Digital Realty listed. Okay. So after if they were to IPO, they will own roughly about 39% or all that, right? So if you look at the top global data center platform solution players, right? Actually, there's basically 3 players that is the top in terms of the leader and their capability and the strategy, right? So the first is Equinix, second, which is also listed. The second one is Digital Realty, and the third one is actually NTT. So you can see that actually Digital Realty is actually the top 3 player in the world, and they have been doing data center for a long time.
Yeah. In terms of market cap, I think you're looking at about 46 billion at the time of this recording, US dollars. So that is actually put them bigger than CapitaLand, right? So one of the big developer in Singapore.
They're pure play in
data centers.
Yeah.
And the thing is that one thing we scared about sponsor is whether the sponsor go bankrupt and all this, and got into debt issue. So firstly, I already told you that they're not much in the debt issue. Second is, if you look at the assets that they have, right, 95% of the assets is unencumbered. So if in the event where they got into issue, they can actually collateral all their assets. So it's still okay.
Yeah.
Right.
So that would be in the worst case kind of situation where the bankers are not reluctant to lend. You have to pledge the asset to lend money. So that's where you come in very useful, right? So if you look at the sponsor, of course, what is the benefit of Digital Core Realty, Core REITs if you invest in them? Obviously, the sponsor will be able to give them the right of first refusal of the properties that they have. So apparently they have a list of pipelines of assets that okay. So based on the numbers that I have, they're about close to 291 data centers.
Yep, this is for the sponsor.
For the sponsor, right? And there's net lettable area about close to 36 million square feet. Okay, so they're going to lease 1 million. right, in terms of square feet. Now they have 36 million, right? But of course, in the prospectus, they list down the potential pipeline that may potentially get injected. That's basically about up to 15 billion, right? So currently they are at 1.3 billion. So there's a lot of room to grow. Okay, obviously, with this kind of acquisition, it depends whether is it yield accretive for the unit holders at the end of the day, right? So, with this kind of growth potential, you have to be ready also to prepare cash in the event when there's a cash call, like preferential offering. Sometimes if they are desperate, they can go for rights issuance. So these are things that an investor have to take note. Even though they have long runway, they want to grow, but when it comes to property, they requires a lot of money. So that's why it's a very capital intensive kind of business. Yeah.
But of course, the sponsor already said that they intend to co-invest 10% of each of the future acquisition that they're going to take. Okay. Yeah. So I think their pipeline is rather attractive. Right, it's slightly different from Keppel DC. They have to really go out and look for data center project. They need to negotiate, need to buy. But this guy, he already have a big set of assets. They're already going out buying a lot of lands and building data center, which is a lot of them is under construction. And Rusmin talked about the 291 data centers that they have, right? About 86% of them are all freehold, right? So it's very, very good pipeline that they don't need worry, and where they can find.
Yeah, so I talked about 36 million square feet available for them to acquire in the future. They still have about 7.6 square feet that are under active development and 2 million reserved for future development. So, I mean, the sponsors themselves are also developing a lot of data centers. There are already some data centers that are stabilized. Some of them, they are still filling up the vacancy. Of course, once it's stable, they eventually may start to inject it in the future. Okay, so that's what they promise likely going to deliver for the unit holders once they got listed. Okay. Yeah.
So I mean, sounds pretty exciting if you ask me in that sense, because it's backed by such a huge player in the data center. It's a global data center player. They've been doing REITs and data centers for decades,
long time, pure play.
Pure play. And then now they decided to enter the Singapore market because I think they see that the Singapore REIT market is actually pretty active.
Yes.
A lot of people here love dividends and all that, tax-free and all that. So do you think this Digital Core REIT, when it lists, do you think they will do as well as Keppel DC REIT? Because Keppel DC REIT is a data center REIT as well, like you mentioned.
Yep.
And you said that, the Keppel is not as big as this player.
Yeah,
not as big, but it's still doing very well.
Yep.
I think they've since IPO, I think they IPO at about 95 cents, and then now they're about
$2.38.
Yeah, 238, 239 as of this recording. So they're more than double up, and that's not even counting the dividends that you received along the way if you invested in them. So Keppel DC REIT has done really well, especially since the COVID boom and all that. Everyone's going online and all this stuff. So do you think this Digital Core REIT will do just as well?
I think given the sponsor's profile, it seems like a very promising, right? I mean, based on the sponsor track record, you look at the historical performance of the sponsor, I think it's pretty good. I think Victor has the data for that, right?
Yeah, so the thing when we want to look at is whether they will pay the same dividend as compared to, like Keppel DC REITs, increasing dividends and all this, right? So if you look at the sponsor, which is the Digital Realty, right, they have really a track record of paying increasing dividends, right, from 2005 to 2021. In fact, right, they even increased dividend during the 0809 crisis, all the different crises, the COVID crisis, they also increased their dividends. So they have been they have a track record of increasing dividends over there. So that's one thing that we can maybe assume that there's going to be a repeated pattern in the Digital Core REITs. Right? I think the only concern right now is still a question mark, like what Rusmi has said, is whether because because now Digital Realty, right, they took the money from shareholder, they go out and buy property, so they make sure that the property will be very yield accretive. But now it's a different case because they spin out the REITs to Singapore, so they have to sell some of their properties to the Digital Core REITs. So the question now is whether the Digital Core REITs can buy all those property at a yield accretive thing. So that's still a question mark that we need to take note. Right?
Okay, so that means we wouldn't know how they would do this.
Yeah.
But based on the DPU,
yes, correct.
They have a tremendous track record in terms of DPU.
They're very conservative. They, like I said, they're very they expand properly. They raise the right money. They don't get heavily geared and they are 95% unencumbered. Right?
Yeah. So that part is track record is really don't know. Right? I mean, you have to list it and then you track them for a couple of years. You start to see whether they are aligned with you or not. Because sometimes some REITs may have a good sponsor, a good asset, but then you have lousy manager inside it, and they don't prioritize your interest. At the end of the day, the acquisition will not be accretive to you, and you will suffer. Share price will come down.
At the end of the day, the sponsors still have to answer to their own shareholder, which is the one that listed in the US, right?
Yeah.
Okay.
So that also made me a question why the one that listed in the US, Digital Realty, lists another REIT here in Singapore when they are already doing very well over there.
Maybe they just want the market here as well. I think Singapore has a good market.
Well, I went to check the earnings call for the parent company. They did say that they want to treat this Singapore REITs as the capital partner. Okay, maybe another avenue to raise capital, so that they are able to recycle the capital from the parent to the subsidiary, which is the Digital Realty REITs. Yeah.
Okay.
So and if you look at the Keppel DC, of course, in comparison, the profile is a bit different because Keppel DC, they invest primarily in Singapore, about 56% of their portfolio is in Singapore, and then the rest are mostly in Europe. So Singapore assets are mostly leasehold. Right, and so it's a bit different, but in terms of potential, both of them are enjoying a very nice tailwind. Right, so and this structure that they have, they all both have the step up rent increment. So I think both should do pretty well as long as the management are steady. All right, I think the REITs should turn up quite okay.
All right. Okay, so let's have a look at at Digital Core REIT's valuation. So I think the headline figure is a 4.75% yield, which is pretty decent. So what do you think about that yield, and what do you think of the valuation in terms of that?
Yeah, so the yield is actually forecasted that they're going to give, if let's say the IPO at about 88 cents, according to their preliminary prospectus. And this is going to be traded in the US dollars. So I think there will going to be some forex risk they need to assume because, if you're investing from Singapore, you have to convert a currency unless you already have a US dollar currency. Right? So in terms of yield, it's about 4.75 based on their forecasted. I think it's quite attractive if you compare with Keppel DC, which currently yielding at about 4.1% based on latest 12 months DPU that we have, distribution per unit. And of course, the Mapletree Industrial REITs is yielding at about 4.6%. I brought up Mapletree Industrial also because about 50% of their assets are in North America. All right, same as this Digital Core REITs, and of course the other 50% is in other industrial assets in Singapore. So it's not really an apple-to-apple comparison, but second closest that we can compare with, which is Mapletree Industrial, about 4.6%. So with Digital Core REITs, trading at about 4.75%, assuming if you get allotted, I think this is quite attractive at current market environment. But of course there are risks, right? And they did mention that their gearing ratio currently is at a very low, right, compared to Keppel DC REITs or Mapletree Industrial REITs. I think their current gearing ratio is only about 27%.
And that's a good thing, right?
So which is a good thing, right? It gives them a headroom for them to level up and then buy more acquisition purely based on loans, right? But of course, to a certain stage, they need to start to do your placement, and at what kind of cost of capital, it depends on what the price will be trading, once they got listed, right? So if they trade at a very high price, then of course the low cost of capital will be very low. Then that will make it easier for them to acquire new properties. Okay, so it really depends on how the market perceive them at the end of the day. So if you look at the interest rate, the gearing ratio, even though they say it's low, most of it is actually floating. Right, so when you have a floating interest rate at low interest rate environment like now, you get the best rate, right? I think the weighted average is about 1.6 or 1.4 thereabout. Okay, so when you have this kind of interest rate, according to them, forecasted is about 1.4. That is for 2022, right? But in the event when the Fed start to increase the rate next year, or following year, 2022, 2023 onwards, they have to refinance the debt, and that will be subject to the interest rate at that point of time. Okay. Where else, if you fix the interest rate now, right? Of course, you may pay slightly higher, but at least you are sheltered when the interest rates start to go up. You don't really experience a lot of pressure on your cost of financing.
And I think in terms of, when it comes to Singapore REITs, you find that many of them actually tend to have a fixed portion of their loans in fixed rates. A lot of that.
So if you look at Capital Land group of REITs, most of them, they like to fix it for 3 years, 10-year kind. So that will give them some buffer in the event when there's a hike of interest rate because of inflation or whatever reason. At least this DPU will not be affected significantly, right? So this REIT currently is naked, right? They are taking a floating loan, so that's something that and you need to bear in mind. If let's say next year we see an interest rate spike, they may potentially suffer a higher because the terms that the rental income they cannot increase that much. It's already fixed, right?
Okay.
So there's a big risk that I'm looking at. Okay, but the loan is still low at this stage.
Okay.
Yeah.
So it's probably the risk where, if their cost of capital crosses the yield that they're going to earn from the property, then of course then it's not going to make sense for them anymore.
Yeah. So if you look at, I think Keppel DC, they are opposite. Okay, about 73% of their loans are fixed, right? And that's actually for a tenure of 3.2 years. Okay, so if let's say next year interest rate will spike, I think they are still okay. Next 3 years they will still be okay, right? Then they will start to experience it maybe 3 years later.
Okay, but then you have a 3-year buffer to kind of move.
Yes, correct.
You even out.
Even out.
Yeah.
Yeah. So I think this is probably the main risk that you see because of the floating rate exposure. For this REIT.
Yeah. So this one and how the manager going to acquire the assets
and
from
that's
the
still a
sponsor.
question mark.
Yeah, and of course the tax structure that they listed here, right? I mean, most of the US REITs that are listed in Singapore, they do some special kind of I'm not a tax expert, but special purpose vehicle where they treated they don't call it as a rental income. They call it like Singapore side will loan the money to the US side, and then the US side will pay interest just to enjoy the tax exempt, right? The withholding tax and all that. So that's something that is still a lot of companies does that. But if let's say US government were decided to change that, then I think that will affect their tax rate implication moving forward, right? So that's something that I don't think it will change, but it's something that you need to look out for as well.
Okay, so I think that's a pretty good wrap up of Digital Core REIT. I think this is one of the more exciting IPOs in Singapore. Everyone loves REITs in Singapore, and it's in the space of data centers, which I think is going to be a booming industry for many years to come. So I hope that was a good wrap up for you guys as well, especially if you're looking into this IPO that's coming up soon. So look out for it. So maybe at the time this video goes out, the date could be announced. Who knows? But it is supposed to happen this year.
Or early next year.
Early next year, right? Okay, so I hope that was a good summary for you guys. Any questions about this IPO, feel free to put them in the comment section. If you like our roundtable, of course, hit the like button, let us know we're doing a good job as well. Of course, subscribe to our channel, many more roundtables coming up. My name is Adam, that is Rusmin, and this is Victor.
Thank you.
Thank you for watching, and we'll see you around again.